Earnings Season, bro.
Hi guys, Randy here from the Earnings Season podcast. So, this week's episode is part 2 of the conversation with John Jackson. Now, I know a lot of you have been waiting for part 2, so I'm happy to put it out there. If you're not part of the people who've been waiting for part 2, if you didn't know that we spoke to John Jackson, this is your chance to go and catch up, right? If you're listening to us, you're not watching us on YouTube, you know that we're on YouTube, right? Well, if you listen to us and you didn't know that we're on YouTube, check us out on YouTube. If you don't want to check us out on YouTube, if you're a pure podcast listener like myself, then check out episode 53 for the first part of that conversation. If you are on YouTube, however, you can check out the link somewhere up here, I believe, and you can listen to and watch that one. If you have, however, listened to and heard that, then go ahead and enjoy today's episode. In this part of the conversation, we go into retail investment, we go into a lot of companies. We actually touch on quite a few direct companies, and John Jackson actually asked me a question that I don't usually answer on air, but because it was a good question and he is who he is, I decided let me go ahead and answer that one. So look out for that. I should warn, however, that as I said for the last time, my microphone in this one is a little bit off, so I must apologize for the sound issues. They're my fault. They have been fixed, but they are there, right? I didn't want to throw away the episode, so you're getting the best sound that you can. It is annoying for a little part, but you can hear it pretty clearly. Outside of that, just enjoy the episode. Give us a thumbs up if you're watching on YouTube. Give us 5 stars if you listen to us on Apple Podcasts or whatever other podcast app you're using. Hope you enjoy and good listening.
Earnings Season, bro.
I love that. So, you're giving us a lot of points. I don't want to drag it out too long, so I'm going to jump to maybe the easier things now. So, we touched on the retail investor base earlier, and first of all, is that a good thing in your view? What do you think of it? 14,000 regular Jamaicans, and hopefully a lot more, in my view, will be going on to the market. Is that a good thing in your view? Do you?
My position is, I see the capital market the way I see religion, and I believe Christianity is a free gift that mankind has, that he can avail himself of the powers of the higher authorities, and there's more virtue in it than a lot of people sometimes recognize. But so is the investment world. In other words, as I say to people from time to time, you're a doctor, you're a lawyer. Based on my experience, take on the investment, get to understand and learn the investment field, because the day that you are fired from your job, if you get fired, or whatever the factors are, or pandemic hits and your normal operation can't perform for whatever reasons. You have this additional skill set. You can stay at your computer at home or wherever it is, and that can become on its own your own business.
Yes.
Yep.
And therefore you can be operating. Here's a business. You don't have to be there 8 hours a day or whatever. You can just spend whatever time you want to spend on it. Invest, collect your dividends. When the stock price goes up, you sell if you think it's time to sell, or you invest more, and it just takes care of you and your well-being over time. So if my philosophy is we're focused on owning real estate in this country to our own detriment.
Yes.
Because
Preach.
Once you buy a piece of real estate, it sets you back cash flow wise for 3 or 4 years. It sucks out all most people's savings, and you end up in debt. While if you avail yourself of building wealth through capital market appreciation and performance, you can pay off your debt. If you have debt, buy a car. And if you want, you can take some debt, but you would have built up enough equity in your investment that you buy the car and you still have investments left over that you can build on, and then when you get to the stage where you can now take some off and pay down on the house, then you have the best of all worlds before you. But we have the thing skewed in the wrong direction. We want to buy a car. We understand the whole principle of mobility, but buying a car is more emotional, and it's a cost and an asset. The house, while it being an asset, absorbs so much of your resources, and if you don't have significant resources, it becomes a strain. And the truth of the matter, most people, it is better for them to rent. I mean, yes, we understand the problem. The landlord may need his house or what have you, but if you can rent at a reasonable rate for a period of time, you rent, and then you build up your savings. And the best way to build up the savings, and you look at the historical thing about stocks. I mean, a lot of stocks have actually done incredibly well. I mean, Jamaica Teas we went on the market at $3 and mash, and we have given, so it moved from $3 something to maybe about $40 now.
Yes. If you remove the effect of the splits,
Right.
Yeah.
So that, and there are many others that have done reasonably well. So it just indicates over time, so it has done better than people have put money in, just converted US dollars and put it in the bank. So the history of the market has demonstrated without a question that a pool of stocks well invested is going to deliver superior return for many people. And you can start at a fairly early stage. You can start with small amounts, and that small amount can grow into something significant.
Definitely.
So yes, I welcome, my whole philosophy is, I believe the opportunities for bettering oneself in Jamaica is so substantial that the message, we should not lose any opportunity not to get that message out there. We just need to make sure that people, and I understand there's a price to be paid for education. So if you're not educated in a formal system, you're going to be educated in an informal system, and they both cost money. So the question is, some of us might not have had the fortune of being educated appropriately in the formal system. So we have to learn with knocks out in the real world. But many people have done so and have done well over time. The critical issue at times is information. You can't invest properly without adequate information. So people need to get the information. People need to know to use the information. And people in business will tell you I saw Lee Chin's comment that you must get a good mentor.
A good recipe, and then stick with the recipe. You don't change it. That's what he says.
Well, I don't agree with him with that, but it doesn't mean if the recipe is not working, you should change it. That's what management is about. But you must know when to make the change. But get the knowledge and utilize the knowledge and spend some time. I say to people, I'm fascinated by planes, but I don't know how to fly a plane I couldn't take a plane off from Norman Manley Airport and land it in London. But the guys who have trained, they go through the dark, and invariably they leave Norman Manley and they hit Heathrow Airport without any difficulty. They will even sometimes have to change course a little bit, but they know their craft and they get it there. And so it is, if you want to be a good investor, you need to just spend a little time, and the time may be talking to friends who are knowledgeable, who can impart that knowledge to themselves, to others, so they can learn from it.
I couldn't say better myself. I'm happy to hear that you love that. We're always thinking, I know people listen to this always think that you need to have a lot of money to start. You hear it from the legend himself. Start where you are, and it is you can consider it saving. I always say, I teach a class on investment, and I say to them that, listen, saving is just another form of investing. So don't say that I'm not going to save, I'm going to invest, or I'm not going to invest, I'm going to save. Saving is investing. All you need to do is compare what is your return when you save versus your return when you invest. And that might, I hope, change some people's minds around when they look at what the average savings account returns versus what the market returns, even in its bad years.
One of the things that when I talk to some beginners or near beginners, is the rules 77, 72, rule 72.
The rule of 72, correct, yeah.
Right. And if people focus on that rule, it sets out a target. So yeah, I don't know the average stock price movement in Jamaica is, but let's say it was 25% over time. Means that every divide 72 by 25, and it's 3 times roughly. So it would take us 3 years at 25% to double one's money.
Correct.
So it is useful for people to consider that rule, because if you're going to put money in the bank at 5%, let's forget about taxes. It's going to take you
15 years, yeah.
15 years. It's going to take you 15 years to double. So which ones? I mean, the dividend you may get off Scotiabank will probably more than double in 15 years. Not to talk about the stock price.
True,
right?
true.
So those are some lessons that people, and I use the same thing with Olint. If Olint was paying 10% per month, if you put in $10,000 in Olint in 7.5 months, it would have doubled. It would have become $20,000. And in another year, that 20 becomes nearly 40,000. So after a very relatively short time frame, I think within 5 years, that $10,000 will be worth some millions of dollars if that was a consistent 10% per annum. So it just shows that if people at the beginning that started with relatively small amounts over the life of Cash Plus or
Olint,
they could have possibly after 5 years end up with quite a bit of money off a small amount.
And let me say shout out to the people, because I know people who did that. I know people who, and it's terrible, and I know they feel some amount of guilt about it, because what they did was, there was a choice in those things where you can either get a small amount paid out every month,
yes,
or you can let it roll, and you wouldn't get it paid, you let it roll. And I know 2 friends who did the smaller monthly amount, and in the end they lost money, they lost their principal, but those monthly payouts, because they had it for enough time, actually paid them out much more than they had put in. Our friend who actually bought a piece of land off of Olint.
Yes.
Yeah, so it really is a matter of understanding financial literacy, where even in a bad situation, it will help you to find the best of the
some people will pay the price.
Yeah,
as is always the case.
Yeah, man, I love to hear that. And I guess to wrap like the retail investor point, how do you think about activist retail investors? So like when we look on what's happening in America now with WallStreetBets and shorting
and
yeah, how do you feel about that? And I'll separate the 2 things, because I want to ask if you think we should have shorting on the JC first. So you can answer either of those first.
Well, I think I see no reason why people shouldn't be allowed to short, as long as you have the rules pertaining to it, proper rules and proper regulations. So I've no, I mean, there are occasions where, one would like to short something because fundamentals don't support
short access for the last few months.
Sorry?
I'm sure you would have loved to short access for the last maybe 6 months.
No, I want to short access. Not at all. One of the principles, you have to be careful in your short stocks that are limited supply, because if it turns against you, you can. You see, I think one of the things you need concomitant with short selling are options. So I could short a stock and at the same time buy options, so call options, so that if the stock move against me, at least I have an opportunity to protect myself.
And hedge. Correct, yeah.
You can hedge it. Under the present circumstance, you can't. If you just shorting naked. You need to find a company that is somewhat sick and is overpriced, short, in my view. But you anticipate that something is going to go terribly against it. But as you see what happened to Gamestop, although it was a weak company, the shorts got troubled.
Yeah, the squeeze really hit it.
Right, and sometimes you don't know what's going to happen. So I believe the options and the short selling, because what short selling does, it helps to balance out the market from extremes. In many instances. So I believe, I know we talk about we want to go to. I regard myself as a fairly simple person. I don't always believe that what is overseas is better than. I'm a Jamaican. I believe in Jamaica. I believe we have significant assets. We just need to do some things right. Not denying that there are not opportunities elsewhere, but we have a tremendous amount of opportunities around us. And we sometimes ignore it. I mean, I know lots of people in the past, they go and invest in the States, they don't understand the investment in that field, and they end up losing money. Because the tendency we buy the things that are the popular names, and there are value propositions and propositions that are not ideally suited to be acquired at a particular point in time. So knowledge is always important, whichever market we're involved in. One of the things I say to people, Scotiabank and Alcan and other people have invested in Jamaica and take a long-term view of investment that has done well for them. So it's not everything, you buy into, say, the junior market that is less liquid than the main market. And when you buy, if you buy a large amount, you have to mentally adjust your mind to the fact that hopefully the company you're buying in has the opportunity to grow profits and grow over time. But there may be short-term periods when all of that may not go well. And the question, the ability to ride out the storm, if you have to ride it out, until it can come to safer shores. But sometimes long-term investment, I'm not necessarily a tremendous believer in long-term investment. I believe you invest, take opportunity, take profits when you think the thing has stopped out and move elsewhere. And it comes back to what I call the 80-20 rule in the stock market, that the 20% of the stocks never repeat or more than 20% never repeat in the top 10.
Next year.
Next year. And if that is what the evidence has shown consistently, buying and holding the stock doesn't really make a lot of sense. You buy it does peak for the time being, you sell it, move on, and try and join the line at some other point in time in the future. So
I'm happy to hear that. I hope the core guys listen. I've been saying this sort of thing for a long time, that you buy towards your goal. It's like being a wagonist. It's perfectly okay to be a wagonist in the stock market. Once you've gotten what you wanted, it's okay to get out.
Yeah. But the whole adage is buy and hold. That's what invest. But you buy and hold if you don't know have enough knowledge about the market and companies. The reality is that if you, especially as small investors, you can buy. Let's take the Wheaton. If many of the people got in the Wheaton had sold off at the 90 cents level, they could have come back and bought it cheaper, right? But so one of the things that we have to try and avoid, and sometimes I have difficulty. I don't have difficulty in making a decision to sell, but if the market is driving the stock up, it's sometimes difficult to determine whether it's going to drive it higher. but I find invariably that the normal valuation norm is a good guide. So if the market is, and I guess historically where the market has pitched a P ratio for individual stock, at the moment it doesn't necessarily count very because the market is, P ratios are being revalued upwards. So the historical norm
PEs are being blown out of the water.
Well, I'm not saying they're being blown out of the water. The fact of the matter is that I grew up in a era where people accepted 10 times multiple as a norm. But then when the P ratio regarded as 10, not 10 was regarded as a norm, interest rates were in the 20s or in the teens on government paper. So if rates are now 3% or whatever it is, if we regard 3 or 4 or 5% as a norm, it therefore means the P ratios should be 25, 30. It will, as I said earlier, it will get there if the stability remains in the system, because people are going to find that even at 30 times earnings, if a company is going at 15, 20, 30% per annum, you're going to be better off buying that investment than putting your money and earning 3 or 4% interest.
Yeah, every single time. And it's so funny to me that you use
that is probably going to grow 10, 15% per annum and make you better off down the road.
Yeah, it's so funny. Yeah, and then you say this, and you're part of a company, JAMT, that I was saying last night to another friend that JAMT is one of the few companies that actually makes money from real estate, and it's not really praised for it, but I'm like, no, guys, they do it. I think you guys got burnt when you did the St. Thomas scheme, and I remember Mahfoud saying never again in that way, and then they did the one at Manor Park, and it worked. Yeah, and we've seen it consistently work since then.
Well, we original concept was to do smaller schemes within the corporate area. The first one worked out pretty well. We made money from it. St. Thomas was, on paper, the numbers looked very exciting. It looked like we were going to make a killing out of it. But that scheme suffered from a multitude of issues. And those things are going to happen from time to time. When I was called to the board, after I said that I'll go, then the company had bought the supermarket up in Manor Park, off Riders Road. And I said, boy, if I were there, I wouldn't have recommended that purchase, because my knowledge of supermarkets is that they are just very low margin things. So it happened that supermarket paid for itself within a year, less than 2 years. It paid for itself from the profits, to the extent that when we looked how well it was doing, we said, the building was for sale, and we said we need to preserve the profit of that entity. We eventually bought the building, and it has kept on being a profitable operation ever since. And that encouraged us to venture into Montego Bay, and it's called Look, Rosy and Savlamar. And then we recognized that Savlamar operation started to break even, but we came to the conclusion it was too small, and so we sold it and pay attention to what we did best, so Montego Bay. But those are learning experiences. Unfortunately, the Montego Bay one was costly. Savlamar wasn't all that bad. So we come back to base. I don't know that we'll never get into that type of thing again, or not. But the one we have provides, it's useful to have it. It provides intelligence, and it still maintains profitability. And as you might have seen, we're spending money to do some upgrading of it and
Yeah.
some slight expansion.
Yes.
I think when things come back to normal, it should deliver superior returns than what it has been producing in recent past. So you live and learn, and part of the reason for having adequate capital, mistakes are going to be, glad if you don't make them, but you don't know what everything that the future holds. You move forward and hoping that the decisions you have made are the best. And sometimes they turn out that way, sometimes they turn out even better. Sometimes they turn out the worse. And therefore, what is important is if you have made a wrong move, is to recognize it as soon as possible so you can take, and it doesn't always happen instantaneously because you still think that you can correct some of the problems. But once you're satisfied that that's the end of the road, then it's time to call it George and move on.
Yeah, I really like the clear cut thinking there, the practical thinking there. I should ask the regular questions that I'm sure people have. You know what? Let me ask one last thing about the top 10. People always ask about the PE ratio that you have on it. Just clarify for us. It's a PE projection that you do, correct?
What is done is that one, there was some indication that a PE ratio of 20 seems to be where the target of the market was. And a number of companies have, some have overshot it, or whatever. People can, it's a guide as to what the stock may do if it gets to the P ratio and the earnings per shares, or earning per share of the individual stock is close to being accurate. So what we're doing is we're making a projection on each individual company. Some of them quite detailed, like a mini budget. Some others it's not as easy to do that. Some is quite easy. So like a bank, it's more difficult to do a bank because there are so many moving parts that are different things affect them. There's foreign exchange movement, there's bank charges and all sorts of things. You just can't predict exactly what's going to happen to the foreign exchange rate. You can't predict accurately whether they're going to buy the same amount of foreign exchange that they did the last year or not. So there are things that make it. But one of the things that happens with banks is that loans are very important, and if loans are growing, you can fairly accurately predict what the loan interest income is likely, or the net interest income is likely to be, and therefore, if the loans are growing at a certain percentage, the business will grow at a certain percentage, and you can use this sort of percentage growth and try and extrapolate from that as to what that may mean for profitability and growth in profits. So we do that projections on the individual, and on my system I have a 4-year forecast, and each quarter the things are updated based on latest set of results. So we go through that process on an ongoing basis, and we use these projected P ratios. Well, if you look at the top 10, you see the P ratio of 20, and we apply that. On the stock market report is essentially projected earnings per share, and the stock price works out what the P ratio should be. So it's what the P ratio is worked out based on the projected earnings and the stock price. Yeah. So it has nothing to the target P ratio has nothing to do with like a report that comes in IC Insider on a trading day basis, where that is purely a exercise as to what our earnings projections are and what the stock price is, and that will change. The P ratio will change on a daily basis as the stock price changes. The top 10 or top 15 is the projected price is based on an assumed P ratio, and I think the assumed one is something like 20. Okay. One can, and one can vary it according to what one can discount the P ratio or increase it, as the case might be, because I say the P ratio going through, or the P ratios for the main and junior market are going through changes. It looks at the main market P ratios at a higher level than the junior market currently. But then the junior market, we look at the individual stocks, and it's bearing out so far this year that the junior market is up 7.5%, main market is down 1 or 2 percentage points. So that while Jamaican teas, you have a number of junior market companies. You have Caribbean Cream, you have CFF, you have Mailpack, you have Lumber Depot, and a few others that have actually gone up in price since the end of the year. And in the main market, you probably have Grace, QWI, Symphony, and maybe 1 or 2 others that have put down 1 or 2 few percentage points. So the indication from our standpoint is that there are better opportunities in the junior market to make money, and I think part of it is that the junior market was neglected over the not last year. Well, last year, yes, but the year before, and maybe the year before, with the plethora of IPOs that were coming to market. I think a lot of individual investors played the IPO market considerably, and there were so many of them coming, and then things like Jamaica that hasn't gone up. There's things like Wicton. People have left their money in. Many people have left money, their investments in them, and haven't really fully deployed those funds to junior market stocks, as the case might be. So you get things, and the point is you get an elongated list of companies on the market. So there are many more companies for people to invest in than there were 2 years ago. So unless the pie has increased significantly, and then you have companies coming in the market with IPOs that's sucking out additional capital. So there are those factors that are at play in the market. But I would say I'm now fairly satisfied that P ratio of 20 is probably a benchmark. But I think you'll see some stocks, as I said, like in the QWI case, if the net asset value and the profit of QWI is going to continue to grow, then if you can't get the stock, if the stock is going to grow 100% and you have to pay a slight premium of the net asset value now to get it, if that's the case, it's not a bad price to pay. I mean, you buy other stocks at a premium to the net asset value. There's no reason why, if the managers of QWI can deliver solid returns, and we've gone 2 years, we outperformed the stock market in 2 years in a row, the local market. Doesn't necessarily say we do the same thing for a third year, but we'll see how that goes. But I believe you guys do analysis. If you can, the market is slow to analyze new data, in my view, and therefore you see opportunities. I mean, the Alaska company out with results that suggest the stock should be in the $5-6 region, and the market took days before the price had moved. I mean, it's an ideal market to better the market in, because you can grab things that are going to deliver for you. I mean, Jamaica teas, yes, people have pushed the price up, whatever it is, but in my humble estimation, you use a P ratio of, and it reported 5.5 cents for the first quarter. If you want to buy by 4, it comes to 22 cents. 22 cents times 20 is 44. It's $4.40. The stock is at 3.27. So
3.8. in terms of close price. So PE a year 22 would put it at like what is that? 14 times PE, which would be low.
Yeah. Right.
Yeah.
So there are those opportunities, and who knows? I mean, that is based on one quarter's performance of QWI. I think for the quarter to date, if my memory serves me right, if my mental calculation is right, we probably have made more money, and net asset value has translated to more gains than for the entire quarter to December.
Mm.
So if that trend or close, if it's not there, it's not far from it. So if that trend were to continue, we haven't finished 2 months of the quarter. So if that trend continues, then you're looking at the possibility that the net asset value at the end of the quarter could be, and we talk about things like race. So we can talk about Jamaica teas, we can talk about, I don't know what will happen to Jamaica, but we Lumber Depot and a couple others that could, well, if you take my assessment that the Golden Cross is going to push the junior market up more. It means that there's quite, and then later on there's gains to be had from some of the main market stocks. And you're looking at higher earnings in the March quarter for QWI, and what impact it will have on positive impact on Jamaica teas. If Jamaica teas can continue to perform on the export front and the local front, then you could be looking at better second quarter results than what the first quarter numbers are saying. But that's left to be seen. But I'm just suggesting to you that $4 something may not be. It may only deliver part of the potential gains that might exist there. So the potential is significant for going forward for a number of things. So but there are several opportunities there, I think, in the market in the junior market in particular for gains to be made. And there are one or two sleepers. I believe that I'm a Berger buyer, Berger owner. I use two things. They had a phenomenal third quarter. Some of it is recovery of or right back of bad debts. When you have that strong third quarter, which is usually not the strongest quarter, and you have the December quarter to come on board, and you have the construction sector growing at 7 or whatever percent, it just tells me, and they look like they have had improvement in efficiency. It tells me that it's a sleeping giant.
Yeah.
That when people are, I mentioned the RGR situation. People are always been making losses or made like he hasn't performed. So let's look elsewhere. We look at NCB, we look at Wysinco, we look at Kanjam or whatever it is. So we're looking at things that are not necessarily likely to perform very well in the short term. But there are other things that are there that seem to have the potential to deliver outstanding performance. We're not looking in that direction. We're probably looking at it belatedly.
Yeah, I'm with you. So usually what we do is we ask our guests to run what we call the Earnings Season Gauntlet, where we ask them to pick 2 or 3 stocks that they, for whatever time period they prefer, and what stocks they think. But you kind of went ahead because you've told us great things about JAMT, that's notwithstanding. I heard you mention lumber in there. I know you mentioned Berger, which you did have a strong. So I'll ask you to just throw one more in there. Main or junior, your choice.
I'm going to give you 2. I'm giving you Caribbean Cream and General Accident. Right? And Caribbean Cream from the standpoint that they had lower cost in some in a number administratively as well as in direct operations. Administratively because they shared the cost with
Scoops. Scoops.
Scoops, which is Devon House ice cream operation, and they have set up depots, and their top line is growing. So I think there are other things that are taking place. The December quarter is the quarter ending in February is usually their best quarter. Right. So what although the October numbers look relatively small relative to the full year numbers, when if you extrapolate or project what the growth in revenues are likely to be for the final quarter, and assume that certain costs are going to remain fairly static, it's going to have an outlandish blowout in profitability. And bearing in mind that last year, what you'll see is that last year in the final quarter, they took on a significant amount of depreciation charge in that quarter. It wasn't spread out throughout the year. So it knocked the final quarter significantly. But that's a comparative exercise. The more critical thing is what will the earnings for the full year come out to be? And my expectation is that it should be in the 50 cents region, if plus or minus something, or likely to be higher than that, than negatively so. So again, if you use 20 times earnings, and then for the next year, which we are not yet in, which starts in March, revenues should continue to grow, and especially if the economy, because that's one of the things that we haven't spoken about, is the impact of the pandemic. We mentioned it a little bit, but you look at last year, a number of companies that the business, none of them shut down after March and generated little or no income and therefore losses. So once you get back into stride somewhat, just by not locking down businesses in the quarter, a number of companies are going to recover significant losses that they made last year in this year. And therefore, that alone will boost profitability for maybe 2 quarters. So people like SOS, JETCONs of this world, that suffered, Express Catering, name them, main events, they will see improvement in the profitability for that 6-month period, because the bar was so low last year with the poor operations that they enjoy. And that is something that investors need to bear in mind. They could see shockingly positive results that will change the full year numbers for a number of those companies. So I think Caribbean Cream is back on some sort of a roll that is going to change the earnings per share and certainly stock price. I think people are they made a mistake of selling the stock down to $2.50 or less than that sometime late last year. And I think people have to sell. But if you look at the order, the queue, you'll find that there's not much selling in the stock. And that's one of the critical things that's one of the glorious things about the trading platform that exists both on the day trader platform as well as the NASDAQ platform. But people can look at, because people don't fully, if you fully understand the implication of the order queue, right? It's loaded with some information that can tell you. I mean, if you see order queue where there's a pile of people of stocks on offer, and the bids are not strong, it tells you should hold off unless you know that results are going to come out that are going to change the picture or whatever. It tells you to wait. Or if you put in a bid, put your bid in low, closer to where the herd is. But so the supply of Caribbean Cream is limited. The bids are a little bit distant from where the offers are, but believe as soon as they get closer and closer to when results are likely to come out, those bids are going to move up if the offers don't disappear, and you'll see a different scenario. General accident, they had a pretty good year in 2019, and the expectations were that 2020 would have been substantially up. The figures are released to September. They took on additional and made additional provisions for the Trinidad operations. But so it's anybody's guess as to, well, I shouldn't say anybody's guess. The people inside know the numbers. I don't know what the numbers are going to turn out to be. I had them initially at about 80 cents. I was told that internally they had them at 70 cents for the last year. The year before they earned 40 odd cents from normal operations. I expect them to come out at about 40, 45 cents for last year, which would still make them undervalued if that's what I had adjusted the 35 cents, but I've adjusted further when looking closely at the figures. I figure 40 cents is where I have them, but I wouldn't be surprised if they came up with 45 cents. But my focus is not so much in that year. My focus is on what may happen this year. There was talk about premiums being increased. And if premiums are increased, it means that they're going to generate more income.
Yeah.
And premiums have to increase across the region, and they're going to increase.
Right. Yeah. So they are getting commission out of a lot of the property insurance that they write. So they'll end up with more retained income, and they are expanding through the Caribbean. So it's me, and they pay a decent dividend. So for me, it's pretty much a no-brainer. It might be off instantaneously, but I have no doubt that it will be a big winner down the road. I think they have gotten the nucleus of the operations right, so they can build on top of it.
Glad to hear that. I don't know if you have any questions for us. We've been asking for so long, and I must say thank you so much for doing this conversation with us. But if you have any questions for us that you'd like to ask?
Well, question for you. The charts that you show, where are those charts from? You created them?
Yeah, that's from our website. I'll give you access to it after this. Our website, mymoneyja.com. It's one of those things that is put together for the retail investor, because retail investors really have gotten the short end of the stick. So I've helped to create something to help retail investors to track their portfolio and so on. As you see, I use it heavily because I pay attention to not just my own portfolio in it, but also PWI's top 10. Every time a report is released, I update what your holdings are in terms of where they are. It allows me to just have a deeper look instead of just looking at the NAV. It also pays attention to the NAV and a bunch of other things. I'm going to give you some access to it, and I'm sure everybody watching and listening will also want to have access. By the time they hear this, they can go mymoneyja.com. You can sign up. Some is free, there's paid tiers, there's free tiers, but it's something that's supposed to help retail investors, really. It's something that I care a lot about. So that's what it is.
Okay. So what are your thoughts on things that are going on, economically? I mean, there's a pandemic. There's some people complaining that the lockdowns are affecting business. There are varying views about it. It's inconvenient. You have fortunately you have up north where politically things have changed, and focus clearly is going to be different than it was over the last 4 or so years. Then in Jamaica, we have a situation where, yes, we just had an election not a year yet. Some months ago, no general election is scheduled for some time. So, ostensibly policies can, under the circumstance, can be maintained, all things being equal. if the fallout from the pandemic doesn't create major dislocation.
Yeah,
And
well,
of course, you're going to be saying, well, crime seems to be a bit of a problem, and this sort of thing. So,
And more of a problem.
sorry?
More and more of a problem.
Yeah, well, it is a problem that's been with us for some time, and so at least it's still lower than it was at the peak of our recent past.
True. What I'd say, at least in terms of my view of the whole thing, is that yes, I think we were at a point where we were really blowing up economically. We were starting to see some of the benefits of actually addressing some of our financial
Efficiencies.
inefficiencies, and Corona kind of came and stumbled that a little, but I think that what happened is that the people that were serious, the people that were on top of the game, that knew what they were doing, are still on top of the game and know what they're doing. Corona really was, for many people, I think, just gave them more prep time. And so I think that as we see more vaccines rolling out, if it works, and if we don't have an escalation in terms of any major conflicts or anything, I think we will see the majors, and carrying back to the JSC, the major companies on the JSC rise in terms of their business. I think we'll see NCB really spread its arms properly, how it has spread it across the region. We'll start seeing the effects of that. Some of the smaller financial companies, the Baritas, the JMMPs, will see a lot more coming out of them in terms of their growth and their continued growth. And their growth means that other companies which they fund will continue to grow. I think that the financial space has been blowing up. I think you'll see a new industry created in that sense. People who aren't necessarily coming from the typical industry, doing what for years you alone did. So I see insiders stood alone now, stood alone for many years, but now we'll see that actual industry growing, I think. For other companies that are directly affected by like Corona,
Tourism.
tourism, ECL, maybe not maybe Margaritaville. I think as that starts to ease and start to travel again, we'll see some things coming out of it. And I think we'll see some good pivoting also. I think we're going to see
Yeah,
a lot.
definitely pivoting, but a big. You mentioned the lockdown as a big part of why auto businesses can't really operate, like a Palace Amusement, because of their usual timing for the showings is in the evening. So because of the lockdown, now we have some issues around that because quarantine and curfew starts at a certain time. So with the vaccination, and I think Jamaica, we've largely we will learn more how to deal with the pandemic more. So you can see other businesses, they're not where they are when the pandemic just came. So around March, we're in a very different place now.
Yeah.
Mhm.
Recovery for some people still a problem. So the party industry, entertainment industry, so many events feels that. Tourism, you see ECL and Margaritaville, as Randy mentioned. So until we reach a certain place with where the public is, so in terms of flights happening, it's like an ECL comeback. Unless they pivot outside of the airport, and I'm doubting that one happening right now. So CPJs, their direct input into the hotel business,
Mhm.
that's a problem for them because hotels, while they're operating now, they still have a much less traffic than they had before. So still hits. I think we need some of our recovery needs to happen for certain companies to come back into the fray at a certain level.
But
Yeah.
when you have mishaps, one of the beautiful things about investment, especially if you're not heavily invested in some of those companies, it gives one an opportunity to buy in low end. For example, CPJ, one of the things I looked at is CPJ main event. I wanted to see main event because I started to buy into main event and CPJ early last year because of I initially felt that we would have been returning to normality much earlier than and it turned out to be. But one of the critical things for me is, as Kerry Pearce says, the cash burn. So CPJ made a loss of 800 or whatever million in US dollars in the December quarter. But the depreciation charge is $1 million. So the cash burn theoretically is not negative. So they should be building up on that basis, even with the losses. And if the numbers, when you look at the numbers in December, I just looked at the December JTA numbers. For December, 95,000 visitors came into the country, compared to November, which was 50-something thousand. June, July was 40-odd thousand. So if and December is not usually the best month for visitor arrivals, unsure what the post-December period will look like. But if each month can grow at maybe 100,000, remain at 100,000 for a while, it would mean that the demand for Caribbean products would be greater. And you compare the September quarter revenues for CPJ, I think was $9 billion, and the December one was $15 billion. So you have a significant growth in sales, in revenues, and the profit in the period actually declined. So those are some of the features that one want to see in these operations. And when you finish discount all of Jamaica Tea's profits and meal pack and Caribbean flavors and lumber depot, the question is where you move your money to next. And therefore,
always in a new vehicle.
You need a new vehicle, and therefore the ones you're going to look at the next set that may actually come up with outstanding profits. So it's a matter of looking. I mean, Medical Disposable came out with results yesterday for the December quarter. The final quarter was a decent quarter, 10 cents per share, better than the previous quarter. But
much better
from an ongoing earnings standpoint, because the previous quarter, they whatever they did with the finances, they wrote off a significant portion of the upfront costs, which I'm not sure that is the appropriate accounting. But if you normalize it, the finance costs for what it would be what it came out to be in the December quarter, it changes. It means that $30 million to the bottom line should be excluded. And one of the philosophies that we have used is that I'm not interested in one-off type items, like saying separate that $800 million gain from the sale of the property. I cut it out. It don't mean anything to me in terms of my valuation of the company. And so it
hold on. How can you say it don't mean anything for the valuation of the company? Because they got that money.
For me.
Yeah, but then the question is,
you're not going to get it
next year.
They're not going to get it next year.
But they have $800 million that they need to be able to use.
And they pay it out as dividend.
They did. They pay it as a heavy dividend too. Yeah.
But in valuing the company going forward,
you have to remove
I don't take one-off type expense or income into consideration when I'm doing the valuation of the company.
Well, you can't. You can't.
Right. So, but some people just look at the overall figure and just multiply by whatever it is and buy the stock. But if those earnings are going to drop out in another 12 months, you're back to baseline. So one has to make adjustments for those things.
We project based on
always looking at the future instead of that happened behind you. You have to always look at what's coming.
I'm looking at ongoing earnings.
Exactly. Yeah.
What are the ongoing earnings of the company? And so if you're looking down the road, the ongoing earnings for a CPJ or Express Catering could be quite positive, depending on what time frame you're looking at. But in the case of CPJ, we know that this fiscal year is going to be not going to be a particularly good year. But the next one, starting in July, would be very positive, because by that time, most of the vaccination in America would have taken place. So, and in our case, we would have been on our way in vaccinating others. So, unless something else crops up, then we should have a clearer runway to take off, or the plane to take off, than was the case in the last 18 months.
I agree with you. And it's a simple point, but it's a salient point that we can't allow the one-offs. You should put them in their place. Look at what they are, value them, and then put them in their place. For some reason, I don't know why people think that. I like that you put it very clearly. I won't even waste time on that. I like that you put it very clearly, because that's exactly what I see it also. You put the one-off in its place. Separate is exciting to me because of their earning opportunities, actually. And the business, the future of the business, not the one-off.
The stock is roughly 20 times.
Yeah.
Probably 20 times normal earnings.
Yeah. For me, currently, I think
what they're going to do.
Yeah. I think for me, I think they have a lot of. I think they're looking at a consolidation of consolidating and enlarging their wheat business and their milk business, especially with regards to exports and so on. That's what I've heard them say. As to whether or not the impact of that will be enough to drive them up is another question. Yeah, because Separate is so big that they need a lot to push them.
You need a big gain to give you big gains. Yeah.
My understanding is that the distribution business is likely to expand. Whatever impact that will have is left to be seen, but that's my understanding.
I mean, a distribution business, in my view, a distribution business is a lot like a supermarket business. Lots of revenue, very, very thin margins.
Well, yeah, but it doesn't necessarily mean additional profit. Without necessarily a significant. The question really is in terms of the capital that you're going to outlay, what return on that capital you're going to make, and the distribution may or may not be all that small theoretically. I mean, the concept we have is that, let's say, supermarkets have low margins. What I found is that supermarket margins are about 20-25% on average, which is not as shabby as if you get the volume, then you'll clean up. And the issue is to get the volumes.
That's true. That's true.
And like this taking where you have a supermarket in Kingston probably gets more volume than a supermarket in Indian Town. So there's more cost involved and maybe more capital in terms of actual dollars. But the dollars are working much more efficiently than in Indian Town. So if it's a profitable venture that doesn't require dilution in EPS, means that
I think about Separate,
shareholders are going to be better off.
And the scale of their distribution is already big, so they find easier efficiency than a small distribution company.
Right. So maybe to add something else doesn't necessarily mean a significant additional cost, because in many cases, distribution the guy might provide the terms of the credit arrangements. And sometimes it might be beneficial. The guy gets longer credit and he provides shorter credit to the people buying it. So it can work in a number of different ways.
Oh yeah, man. There's lots of opportunities there to come. I think for me, I'm also biased towards where I can get heavy impact. So I'm heavy junior. You mentioned Lumber Depot, which heavily undervalued in my view, going to surprise in the next quarter, I think.
The one after.
And the one after, and they're currently undervalued. I see them easily as off the top of my head, I'd say a $4 or $5 stock, and they're currently, even now with a little bit of push that they've gotten there, I think they're maybe $2.15 is how I'm looking at them at. So I actually like Lumber Depot heavily, and I've been buying, and I continue to buy actually, because like I said, I see this as a $5 stock, and it is currently undervalued and hidden, meaning it's in the noise. Sometimes we lose track of everything when all the big noise starts to happen.
I'm not sure it's hidden, because the truth be told, when you look at the market, that is one of the few stocks that actually move. I think the issue with Lumber Depot has to do with probably the second largest shareholder, And so it if it goes up to a certain degree, people are going to people are fearful that you will get a flood of selling.
What do you mean from Blue Power? Because Blue Power might let it go.
Second largest shareholder. It's not second largest, actually the largest now.
Okay.
Yeah.
Okay. You worried in the way that the ETL thing was worried about also, like, you know, they might let go.
I didn't get.
I'm wondering if are you fretting in the way that some people were fretting around Derrimon when
I'm not fretting about it. I believe that if you buy the stock at the present price, have a 1 year time horizon in mind. If it happened before, then fine. But in a market that is, you know, they have the total number shares or 500 or something sort.
it's a small number. Top 10 owns 456 million, which is a little over half. So I think it's less than a billion. Let me not guess, because we hear also it is 706 million to 37.
Okay.
So, yeah.
So the situation is that it's not a stock that is going to be deeply held by big owners, and therefore, in that scenario, you could be faced with a situation in which selling pressure comes on.
Yes.
And that selling pressure could cause you to have to wait some time for the payoff.
I get you. On my side, I'm not expecting
The point you made is, I mean, if you know, in an environment where interest rates are where they are, the reality is if you can double your money in a 12-month or like over 12 months, in a few years' time, when you do that, you'll be looked at as a genius. So it wouldn't be a bad rate of return if you can do that in a year.
Well, they've returned to me, not 100% yet, but they've returned quite a bit at 215, and I expect them, like I said, within 2021, I expect them to hit at least 450, if not higher.
I have no problem with your projections. I just, when it comes to certain investments, I'm a little the time factor. I provide some amount of elasticity for it because it probably should and probably will. It's left to be seen whether it materializes, but I expect it to go up in value because when you look at that was listed beginning of last year, end of the previous year. Let's call it beginning of last year. It has now gone to $4. But you know, we had a forecast from early last year, something like 20 cents or close to 20 cents per share, or 20 or a little over 20 cents per share. But we have had 20 cents for some time. And it has taken quite a bit of time to get there. Fine, last year was a terrible year in terms of the overall market, but you know that's our expectation, and it's going to happen. It might look a little bit outlandish at the time, but the reality is that
you're gonna hit.
Sorry.
The reality is you're going to hit at the 9-month mark. They're at 14 cents, and we know
right.
that the last quarter was heavy for them, so they're gonna break 20 cents easily.
Well, I don't think they're going to break 20 cents easily, but maybe you know something that I don't know. I had a discussion with someone last week before last, and they said they expect 25 cents or whatever. So for them to get 25 cents, they'll have to double the revenues in the December quarter.
Mm-hmm.
Right. Year over year. And I said my forecast is about 50 or 60%. I'm not saying they can double it, but I wouldn't bank on a doubling.
Yeah, I don't know if I'd bank on a doubling.
Yeah, that seems heavy.
I would maybe put them at most 8 cents for the quarter, which would bring us up to 22 cents for the year.
Well, I'm suggesting for you to get 22 cents, you probably need to grow the revenues in the quarter by maybe 70%.
I suspect that they have done something along those lines.
75%.
I suspect so. I suspect that this Christmas was very good to them. But again, speculation until we get the results in a little while. Yeah,
So are you saying that the run up in the stock price and the inclination to go over $4 is street-wise information?
I don't know what you mean when you say streetwise information. I suspect that this run up is heavily
Speculative. People are getting in ahead of what they expected to be the case.
All right, this is the retail investors that pushed it here. However, I believe that the business performance, based on if you look on the overall customs Jamaica import numbers, and who they're saying importing, and how the Christmas season has gone, I suspect that Mailpack has done better than 7 cents in the last quarter. Much in the same way I'm pinning my lumber expectations on the fact that business itself might only have increased maybe to the tune of 7 to 10% for them. However, the things that they are selling, the commodity prices have flown hugely. Cement has gone up, lumber itself has gone up 80 to 100% in some places. Steel has gone up week on week. And even when the government started buying in earlier in the year, as pointed out, construction continued to fly. So in lumber's case, I am expecting lumber to surprise. I would not be surprised if lumber came in with a revenue figure that was much higher and a profit figure that was easily doubled. I might be being a little less conservative there, but I would not be surprised by that because of the price increases of what they've been selling. Price increases, especially of actual lumber. Lumber has moved 80% in the quarter that they're still in. Cement has gone up heavily. Steel has gone up heavily, and those things are their mainstays. Paint has gone up heavily. But we see the rise in Carib Cement business, the rise in Berger Paint business, the rise in art manufacturing business, the rise in Tankwell's imports and their selling. That tells me that the front line, which is something like lumber, that frontline company very likely has seen a grand increase in its prices also, and its profits, its margins also, even if overall units sold may not have risen that much. But I'm under the impression that units sold have also risen highly. So I suspect lumber is going to surprise and bring me, because I'm heavily invested and I continue to buy, so bring me quite a bit of a Easter surprise maybe.
You were at the AGM?
I was not at the AGM. I had it reported to me. I'm very afraid of this corona thing, so I stay inside as much as I can.
I thought young people had no problem with it.
I'm not as young as I look. and I've had asthma, so I'm very, very careful about. I don't have it. I don't ever want to find out the hard way.
And I appreciate that.
Yeah.
Your top 5 stocks are what?
It's a big question. I never answered.
For the rest of the year.
If the legend asks, I'll answer. GK, JAMT, thank you. QWI, but because QWI, JAMT, I'm going to put it under that. Lumber is going to surprise me heavily. And outside of that, I'm keeping my bets to those 4 for now. Even though later in the year I expect some good things. I suspect Carib Cement is going to pay a dividend for the first time in what, 12, 13 years?
Months.
Yeah, and if they do pay that dividend, I expect that the crowd reaction to it is going to be very, very strong.
Mm-hmm.
Market reaction to it is going to be very, very strong. And I will always bring back in NCB at the end there, because NCB, people aren't paying attention to them now, and even this 32% drop in profit that people are talking about now, don't let that fool you. NCB now is not the NCB we think of. It's a major financial group that we're not acting like it's a major financial group. By the end of the year, especially after they pay their first dividend, once they get that free up and they pay that first dividend again, I suspect they're going to go back over $200.
When?
I would put that. I think when they report the next quarter, when they report that would be their second quarter,
Yes.
expect that they're going to have a dividend announcement with it, and that is going to send the pensions back in. That's going to send the retail investors back in, and that will see it being pushed closer to the 200 region. But I'm willing to wait until that point, and until then, I am banking on lumber. I'm banking on. I'll tell you what, I'm banking on JAMT.
JAMT.
You know, after manufacturing arm. Let me put the face up on the screen properly when I say this part. I am banking on JAMT spinning off the manufacturing arm and providing a reserve or a benefit to existing shareholders to be able to get in on that new IPO. And as a result, I suspect that will heavily influence JAMT's price.
And in turn, QWI.
And I know that certain directors have been buying up JAMT very heavily. And I know that QWI has also been buying up JAMT heavily. And QWI benefits from the rise in the campaign. So if JAMT has a good rise and QWI then benefits from that, JAMT again benefits from it. And I am hoping to just be in the middle of all of that, benefiting from the spin-off. Plus, if they spin off that manufacturing arm, that's a growing manufacturing business with a strong export arm. You can't shake your head at that. That's a strong business on its own. So I'm very interested in owning that manufacturing arm separately, in the same way that I was interested in owning the lumber arm of
the new quality. Spin it.
So that's right. What is Danhai saying?
Yeah, Danhai, what's your pick, Danhai?
Oh, look. JAMT, as you know, is a favorite of mine. I was spoken heavily on JAMT. So I think I have the same thoughts as Randy, but not just the manufacturing arm spin-off is additional for me. There is the big loss for QWI, the 411 million loss, I think last year, coming off the trade in 12 months. When the current numbers hit, I expect good results from QWI coming into that. On top of so writing off that, the loss coming off of the 12 months, plus the good numbers going into the quarter, I expect some good from JAMT. So JAMT is a big favorite of mine. I've been buying. I plan to buy more. Cygnus is a favorite of mine. With the new money they're taking on, I expect that with new investments made and the income should be coming up. They're reducing the debt burden, so the interest expenses should be falling coming off, right? So Cygnus is a good pick of mine. I would be buying no. I haven't. I think the 1470 was a good price, where the fall was expected. So I think around now would be a good time to get again. The only issue I can see coming right now is when they took in the extra money from the raise, then they might have some issue with the FX. But they did allude to something with that. They have a situation with their fund, with their bank, so they might have hedged against it. So I expect some goods to come from that. Next, lumber, but I don't want to stay on this point. Fontana did a good turnaround for the business for the last. You could see where the business. So people might not expect to hear this from me and Randy, but Fontana. There's a time when Fontana was overvalued in my eyes. It was at value. It was around $8 plus, and that to me seemed like a fair value, a fair future value. At the time, it expected to be overvalued, around a $6, $4 stock. But now that the pandemic hit and the business was actually impacted, but now they're moving into better operations. You could see the quarter before they did well, so the December quarter should look good to me. Should be great actually. So Fontana, I've been betting on Fontana. There are other things, but active buys right now, not so much. I have KREMI Cement because I expect good results from them, and I'm looking at a dividend probably.
Okay. Sorry.
Yeah. I was trying to ignore keys in my screen. I was quite, you know how my situation with key. So yeah, but key is good. I think we already spoke about what we expect for this quarter.
Yes.
The difference comparatively, the last quarter, this quarter, same period last year, this quarter coming in.
So let me throw a span in the works.
All right.
Alliance, whatever. What is it? Alliance Investments.
Yes. Alliance Financial Group or whatever that was. Good. Sorry.
What is exactly the status of it?
Indefinitely postponed.
Yes, it's postponed until further notice. So it seems to be up in the air.
Yeah.
So what could be the factors that interfered with it?
Boy, John Jackson won't get us in trouble, you know. I think Alliance is an example of the importance of the broker and the broker's due diligence in the listing process. And it's a live example of how perception influences a listing. Because I've heard it said that the perception now is such that they can't come back to the market. No, I don't buy that they can't come back to the market. But I think it would be very hard for them to come back to the market with how this has happened. And I think that if they come back to the market, they almost have to do a full explanation of what happened and why you left and why should we.
It has to sound good. It can't be that there was any fault on the company, because then people get other people's right stuff at that point.
Yeah, man.
All of what?
They can't be. So when they do come back and if they do give an explanation, I said that it has to sound good, because other people will be looking at it as if it sounds like there's a fault on the company and on why they couldn't list this time, then people are going to take that badly.
Yeah, and remember what was said. It was said by them that there is something to do with a sister company that the directors are also
own.
If you come back to market, you're going to have to give clarity on what that is. I can feel safe as an investor. That's my.
But that company is regulated by
FSC.
FSC, correct.
Is FSC about? No. The
wait, BOJ, you're right. It's not FSC.
It's a BOJ thing, and one hasn't heard BOJ. Well, BOJ doesn't have to say anything.
It doesn't really.
If they have gotten to where they have gotten, where the prospectus was issued, so the stock exchange went through it, the registered companies went through it, FSC seemed to have gone through it, and I presume give them, well, unless the FSC didn't give their blessing, but one didn't hear instantaneously that the FSC blocked it from the issue was posted. It happened sometime afterwards. In fact, it happened a few days before it should have opened, if my memory serves me right.
It's strange because they announced their listing at the start of 2020. So there was more than enough time, in my personal view. Obviously, I don't know that inside information. I think they had an entire year, pandemic or not.
When we first heard of it, it was.
Yeah, they announced themselves at the JC conference at the start of 2020, before the pandemic hit.
Yes.
And they were saying the big deal was, we're about to list. So that was the big deal, and you'll hear about it in a few days. The pandemic hit and they chose to pull back. And now at the end of the year, you come forward with it.
And you can't go forward, so yes.
So what is the street? What is the street saying as to the real reason? Because I can't buy the argument about a problem with a sister company. right? Because I can't see the connection between.
Honestly, I can't see where a sister company would affect the listing of this one.
I can't see the sister company. What problems could exist with the sister company?
That would fuck up.
It's not the shareholders are the ones selling shares, not even the company raising capital.
That's true.
So I don't know that the stock exchange listings are so regulated that all the directors and whatever need to be virgins, right? Not only virgin, but they must not have looked at any woman or man, as the case might be, in their lives.
You never start off like this earlier.
Well, since we're talking about individual stocks, that one just came to me.
Yeah, I don't know what the streets are saying many things, and because this is something that we broadcast on the internet, I don't know if we want to repeat everything the streets are saying. But
you can cut it out.
I don't cut it out because the people need to get this. But because you're raising a good question, it's a question that everybody wants to know. I don't know what it is. I can think of certain rules that I know that in a sister entity that might affect you, and the fact that
what rules? What rules?
You know, I take that back. I can't think of any rules. I can think, okay, you're certain you have to fit and proper is a part of the thing.
No, there's no rule regarding. Well, listen, they are Bank of Jamaica regulated, so they fit. They pass Bank of Jamaica fit and proper regulations.
Correct.
The report that has come out didn't speak to anything regarding the company itself. It spoke to a sister company.
And the company is still doing business.
And the company is still doing business. So it just seems extraordinary strange to me.
Agreed.
That it's okay. So it was put off for a month, then the month was extended.
And a good point is why was it held so long? Because what was really the issue for it to be held that long, and then we're still not getting a go ahead. So
it's and you are suggesting broker issue, but why would if we understand if what my understanding is the FSC, they said the FSC had no objection for them to issue the prospectus.
Yeah.
Now the FSC doesn't necessarily talk to the public, so to speak. So if something is gone on, they might call their broker, they call the attorney, and speak to them. But I don't know. I've tried to put my brain power on it, which is not oftentimes great, and I can't. I haven't focused significantly on it, but I thought I can't see the connection between a sister company and it. So
what did you come up with? Tell me what you came up with. What did you come up with?
I frankly have not come up with anything because I can't see. The company. What I see, and I don't know that's a FSC scenario, is that they took on debt towards the end of the period. It would appear they take on significant debt, $6 billion or whatever the figure is. They are selling shares to the public, and none of those funds are going to the company to either alleviate the debt or what have you. So the question is, what I can't see any. A company is free to take on debt. I don't know that the FSC or the stock exchange can tell a man they mustn't have $10 billion in the balance sheet and sell the investors selling shares to the public of their own shares. So, and they would have given some assent. I mean, maybe after the debt was taken on, and I'm not suggesting that is, but that's the only thing I can see in looking at the numbers, that the debt seemed to have been taken on relatively, well, certainly since the previous year's financial statements, and is stuck into investments of some sort. Now, it was those funds taken on to shore up another entity.
Well, that's speculation that I don't think the numbers showed us, right? I can't assume it. When I saw it, my personal assumption was that the listing was step one of a multi-step process. I wouldn't have been surprised if a little after listing they did an APO or a rights. Well, not necessarily a rights issue. I wouldn't have been surprised if after listing they did an APO.
Why would they have to do that? Because they don't need the money. We're generating cash flow of nearly $1 billion a year or something of that sort, or whatever the figure was, substantial cash flow.
Yeah, but relieve the debt. So if you take on the heavy debt a little before you leave,
don't need to do that because they have the cash there.
Yeah, but why spend my money when I can spend yours?
Well, yeah, but I first of all, if you're going to go to the market to raise funds to issue shares, you might as well do one clean thing, and you sell, the company gets some money, and if that's what you want, and the shareholders get some money.
Well, that's not what they want to do, because the shareholders were selling, so they personally would have gotten money.
Yeah.
And then I suspect that the company, with the things that it had planned, again, this isn't a fact, this is my assumption. Things that it had planned, I expect that they would have had to raise on top of that in order to get more done, and that raise would have come after listing. I was seeing that before. We saw First Rock coming to market, and they said it in their prospectus that they plan to raise money.
But that's a different. I said that's a different animal. That's almost a startup, right? So.
But I'm giving the idea, putting forward the idea of a company listing and then raising a little after listing, which isn't necessarily strange in the world.
Frankly, I don't think that would go very well with the investing public. That they would take out nearly $2 billion not from the company, but from the market without the company, if the company needed capital to raise capital for the company.
There were concerns raised about that. That was something that a lot of people had. Personally, I don't have an issue with that, but again, I don't view the market in the same way. And I think maybe you're coming from an accounting point of view, which is strange, by the way. I'm not used to accountants investing. You are a rare beast for that. Most accountants don't invest, as I'm sure you know.
Yeah.
Yeah, so it's rare for me to hear that, but yeah, I think they come to.
I personally don't. If somebody invests their funds into operation and want to take out some cash and want to sell the shares, I look at whether the company is worthwhile investing in. If you want to take some money and let me participate in the company, I wouldn't otherwise been able to participate in, and I think it's viable, then thank you very much for doing that. So I don't have that problem. Other people have the problem. But if you sell 20% or 25% of your company or 30%, and you still hold the 70%, I would presume you want to protect the 70%. It's a lot. Everything now is a different matter. Right? So I don't have those problems. If the company is viable and can continue to be viable, and I get an opportunity to invest in there, and I believe it can deliver for me what I want, and fine, take whatever shares, sell more shares to the public.
I can see, but I don't know what the back end of it was. What was happening behind the scenes, and then this hiccup that happened does not inspire confidence at all. That's the simple truth. And you're right; it could have been done together, because Wisynco did that. Wisynco had a situation where some shares were issued, but they also took on a selling shareholder, but they also issued new shares.
Yeah.
Yeah.
So something clearly has happened that is requires some time to have result.
Mm-hmm.
Right? Because if it just the prospectus that needed some rewording, I'm sure they would have been able to do that already.
As
I
we
don't
see.
think that we need to do that at all. But you know what? We've been going for a while. So let me say thank you to Sir John Jackson. We can still talk after we finish, but I want to wrap up the
Okay.
that the people get. So thank you very, very, very much, John Jackson. On my behalf of me, the listeners, the watchers, Danhai.
Danhai as well. Thank you, sir.
Yeah, man.
But I hope people listen to it and won't
Oh,
be upset.
I have no doubt that they won't. It is so long that we might
They've
actually
been begging.
take it. So we will chop it. And Sir Jackson pointed out to us. So anybody saying that the episodes are long, you have support from John Jackson because he said the same thing. So we might very well chop this one into pieces, but pieces are not. Thank you very, very, very much for doing this. And if there's anything you just want to tell the people, Sir Jackson, you can put it out there right now.
Well, first of all, they're welcome to visit IC Insider every time they don't have to pay for it. We try to provide people with information that they oftentimes don't see in the public domain. Insights, forecasts. We don't always get it 100% right, but we believe with our history, I've got most things right. As you can see, the performance of QWI that is outperforming most things out there of very nature. It's part of the educating of the investing public so that ordinary Jamaican can participate in the productive sector of the society and benefit from when we democratize the investment of businesses, we'll have a better Jamaica because people want to make sure that the environment, etc., is conducive to profitability of businesses. And I think that is. I'm just excited. I mean, I'm now older than you guys are, but I think the future is looking quite interesting. And people who educate themselves and take advantage and learn the skill set, I think the future is just going to be exceptionally great. I think I see Jamaica, despite the crime situation, I think which will get under control at some point in time in the future. I think the future is just great. And I just want that the Jamaicans keep whoever the political leaders are who are in power, keep them on the straight and narrow so that they don't derail the progress. One of the things I said is that if Jamaica was growing at 2% per annum from the 1970s until now, it would be twice the size that we are economically, just 2% on average. Right. So the derailing of the economy in the 70s and some period afterwards have set back this nation in an incredible way that somebody needs to really take on board and chronicle the history and the dislocation that has been caused by just some missteps that has destroyed a significant portion of the country, driven away many Jamaicans out of this country, and still continue to do that because people, as much as many of them would like to stay here, find great opportunities overseas. And that, while that may have been the case many years in the past decades, we have lost some of our bright, skilled, knowledgeable people who could actually be here to help build the country and make it a stronger and better country. And it is now.
Well, we're hoping to do our part to fix that now when we can. Yes.
Sorry?
I said we're hoping to do our part to fix that now while we can.
Well, I'm glad to hear that, and I'm glad that other people are coming to the fore, and it's important that the younger people can find and see a place that they can thrive in the country and don't necessarily have to go overseas to apply their skill sets. And that to me is a hallmark of what is necessary to continue to grow the country and the society, and make sure that we have a population of leaders in the future who have a strong interest in the country, but also have a broad-based knowledge that they can actually ensure the growth and development of all.
All right. So thank you so very much, Sir John Jackson. I keep calling him Sir. He's not knighted yet, but I said Sir John Jackson because I guess in my mind I think of him that way. So thank you, guys. I hope you guys have enjoyed this episode. From me, Randy at Art here on Twitter.
And me, Danhai at HDAN on Twitter.
This has been another earnings season. Thank you, guys.
All right, guys, let's go.
All the best.
Earnings season, bro.